18.2 work together. Here we're going to journalize entries for our long-term debt. So the instructions say the journals and a loan payment schedule for Lamber's stores are provided below. Assuming the current year, journalize the following transactions on page 6 of a cash receipts journal and page 12 of a cash payments journal. Refer to the loan payment schedule when journalizing the December 1st transaction. Source documents are abbreviated check C, receipt R, and memorandum M. So we have our transactions here, and the first thing that comes up is our cash receipts journal. It looks like on June 1st we signed a 5-year 9% note. July 1st issued a 20-year 6% bond. And then December 1st paid cash for the December payment on the June 1st note payable. And then December 31st paid cash for some semi-annual interest on bonds. So our cash receipts journal gets the long-term notes payable. This would be the June 1st, 5-year long-term, and then the July 1st bonds payable. Okay, so that means that money is coming into us that we are going to use. June 1st, long-term notes payable. Let's see, it's receipt 337, and we have a credit of $25,000. So we get a cash debit. And then July 1st, we have a bonds payable. And it is receipt number 345, and that's for $200,000. And we get that cash debit. Cool. Okay, the next thing we have is our cash payments journal. December 1st we paid cash, and December 31st we paid cash. So let's see, this is where we're going to have to go into this item right here. Okay, the titles are beginning balance, interest, principal, ending balance. So if we look at December, we have $174.88 for interest and $344.08 for principal. We need to put both of those into our cash payments journal. And then our interest expense on December 31st paid cash for the semi-annual interest on the bonds. So let's get our cash payments journal in here. So as I said, our first one is December 1st. It's a long-term notes payable. Check number 842 right there. Our debit, if we look at December, principal, we'll write that first, then interest. Our principal is $344.08. Our interest was, to remember, $174.88. I'm looking at this number here, December. Principal is right there, and interest is right there. We need to account for both of them. And then we add those together, $344.08 plus $518.96. And then December 31st, oops, that doesn't go there. Interest expense, check number 861. Let's figure out this one. So this is the bonds, a 20-year 6% for $200,000. So let's calculate how much. We've got $200,000 times 0.06. So this would be the annual amount of interest that is paid out. So this is semi-annual payment. So we divide it by 2 and we get $6,000. Awesome. Let's check our answers. Cool. Uh-oh. I forgot to fill this in. Sorry, the account title here is interest expense. up, which is right here. It's moving too fast. So I lost some points there. It's a silly mistake. You guys, I'm sure, have made it too. Every line item needs an account title. So I forgot to write interest expense, which we get from right here. 174.88, it's our interest expense. Cool.